Ladies and gentlemen, the Singapore economy is suddenly registering a downturn in its exports, and I think this is a very serious sign. And let's watch on to see the implications to our stock market and our investments, shall we? So in this video, we will cover the red flags they are flagging out right now for our Singapore economy. And we're trying to do a quick analysis and an urgent analysis of the declining export. So Singapore key exports fell worse than expected in July as shipment to US plunged by 42.7%. That's very serious. You know, Singapore is a trade-dependent country, and our exports is our lifeline. And if our shipments were to plunge significantly, then we are in trouble. Singapore key exports dropped by more than expected in July, reversing from the rebound in June as front loading of orders dissipated towards the end of US President Donald Trump's tariff pause on August the 1st. So this is quite serious, right? So in June, we actually saw quite a lot of exports, but that kind of a front loading has gone. Okay. So non-oil domestic export contracted 4.6% in July from a year ago after a revised 12.9% expansion in June. Data from Enterprise Singapore on August 18th shown. The reading was worse than the 3.8% fall forecasted by economists in a Bloomberg poll. So this is a very serious downturn. And by the way, we'd like to do a quick commercial that our Young Gang Telegram group has grown to over 3,000 followers. And this Young Gang group, we actually encourage each other how to become healthier, how to become slimmer, how I shared my weight loss from 77 kilo to 72 plus kilo. And we will share a lot of all these health tips. And I will also give the privilege of launching the AI course tickets there first. Okay. So everybody, please sign up with our Young Gain Telegram group. The QR code is here. Let's watch on to our video. So just to recall, there's a 4.6% year-on-year contraction for Singapore non-oil exports, and that's largely driven by the US exports decline, and that was significantly lower than the 3.8% economies have forecasted. So it is not just our exports to US have declined. So US fell by 47%, but Indonesia also fell by about 32%. China fell about 12%, and EU also fell. Taiwan also fell. Our exports, collectively have fell by a significant number year on year. So the widespread decline across multiple major trading partners suggests systemic issue rather than isolated market challenges. So it doesn't mean that, US have tariffs over before and the rest is okay. No, right? When US fall, everybody also fall. This is a very serious matter. And I think this is the first time that maybe, there are troubled times ahead. Despite all the other sectors that are being hit, maybe electronic sectors, which is the anchor sector of Singapore, could show some strength. But no, the electronic sector is also showing slowing growth. Fortunately, not negative. So year on year, there's a 2.8% increase, but it's significantly lower than June's 8% expansion. Personal computers surged 80%, driven by enterprise replacement cycle and remote infrastructure upgrades. And bare printed circuit boards increased 25%, integrated circuits increased 8%, but collectively, this is a slower growth than June. Now, the other sectors like pharmaceutical, food, and other sectors are also registered decline. But interestingly, there are isolated growth area. Non-monetary gold has an increase. And I'm actually surprised that Singapore do export some gold. For non-monetary gold, that means these are not gold bullion or something like that. It has got some increase. Commercial gold, jewelry gold, I suppose. Specialized machinery also has some growth, but majority is a contraction. Now, if we were to look back at what has happened to the tariff, 1st of August, US tariff pause expired, triggering a 10% reciprocal tariff on Singapore exports. Then after that, on August the 2nd, implementation of first wave of tariff, okay? And I think that will disrupt some supply chain. And in September, possibly, there will be implementation of some semiconductor specific tariffs. And for Q4 2025, we will see industry level kind of decision making expected for firms to offshore production, to reshore it to US, and that's going to be bad for Singapore. So Singapore government enterprise SG remain optimistic with a 1 to 3% growth for non-oil exports, though increasingly unrealistic after July's decline. So, but overall GDP, because we have a strong construction sector, plus other sector as well, like the finance sector, maybe we will still have a positive growth this year. But what is for sure is that the strong 7.1% first half growth is unlikely to be sustained in second half as the tariff cascade through supply chain. So Selina Ling, the chief economist of OCBC, has warned that the crystal ball remains murky for now. The critical question is whether we can see whether some industry sector specific exemptions, in particular pharmaceutical or semiconductors, but if they were to hit them, we could possibly be in trouble. So where is Singapore uniquely vulnerable is in a couple of sectors. The first one, they were highly vulnerable, is in pharmaceutical. Pharmaceutical represents a 85% risk, okay, or so, because Donald Trump really wants to bring pharmaceutical back to US. And we are a heavy US-centric export market. Semiconductors is also in the same category. Donald Trump wants to bring semiconductors back to US and potentially will get hit as well in a big way. Precision engineering is also classified to be at high risk. We think that it's around a 45% risk. And food manufacturing, probably not so much of high risk, but in a global regional market, if there are commodity price fluctuation, we could hit as well. So from a vulnerability perspective, we certainly have a lot of risk, and maybe the July numbers is just a first taste of it. So what could Singapore do? Well, Singapore clearly is trying to negotiate some tariff concessions, and DPM Gan Kim Yong is doing all he can to negotiate a better deal for us regarding some blanket waivers for pharmaceutical and semiconductors. My gut feel is, wait long. I don't think US will care. And we should try to accelerate some of markets diversification. I think we are too dependent on US. Maybe it's time to spread out, okay, our risk as well. And also, try to retrain and upskill a lot of staff and workers across Singapore. I think Prime Minister Lawrence Wong yesterday during the National Day rally talked about expanding the Skill Future program, and I think we should clearly take advantage of it. There are a lot of opportunities coming out in some other sectors, and we should not be overly dependent on some markets. Unfortunately, the window for action is narrowing. So for US, the pharmaceutical and the semiconductors tariff might just land suddenly. And clearly right now, what we want to do is to quickly monitor very closely some of these issues and then and adapt some contingency scenarios. What if we have this kind of major contraction? I'll just say this, that Singapore is in a vulnerable state. We are very, very vulnerable to big countries, sudden contraction, sudden tariffs, and sudden trade barriers kind of thing. So there is a limited impact that we could shield ourselves, but uniquely for ourselves, we have to be very careful. Now, will this spell some trouble for Singapore? Hard to say. I would rather take a more conservative view. And I'll always say this, right? Singapore is very vulnerable, and we should not put all our basket into Singapore for our investments. And I always say this, your salary is in Singapore, your business in Singapore, your CPF in Singapore, your house in Singapore, your second property is in Singapore, many of your stocks are in Singapore, then if Singapore suddenly be hit, then everything will be hit, right? So we want to make sure you diversify out, and that's my personal opinion. Okay, so let's just watch on, and we'll see each other for live stream tonight. I think the risks are high. Please remember to hit subscribe so that you don't miss some of this breaking news. Thank you, and I'll see you tonight. Bye bye.